sell their home as fast as possible. I'm Charlie, welcome to Moving Home with Charlie, and thank you for coming. Your house is worth whatever it's worth, right? Whoever sells it. Wrong. If you want to find one of these guys, look out for those compassionate professionals. All estate agents are not the same. It is a massive mistake, and it's a mistake that will cost you money, not the agents. Your clients are free to just walk away.
All our clients tonight could watch this and say, take my house off the market.
You need to find the least terrible estate agent. But here's my advice on how to price when you're renegotiating. There's nothing else you need. If you've got this 150 quid, that's it, you can move in.
Oh, right. Oh.
Good evening, everyone. Welcome to the Property Press Awards.
Hello, everybody. Good morning. Good afternoon. It's Friday. No, it's not Friday. Don't know what day. It's Thursday, the 12th of January. I am nervous about this live stream because I set out this morning to just do a quick update prompted by the Persimmon Homes trading update. And as I was preparing it, it just cascaded on me what's happening right now. And for those of you who are watching this and don't have time to watch the whole thing, I'll get to the punchline right now and then go through the video explaining why I think that the house price collapse has already begun and is underway. We just won't see it in official figures for another 3 to 6 months because of the time delay in reporting. I could be wrong, and I'm not telling anyone to listen to me or act on what I say, because this is very serious and it impacts an awful lot of people's livelihoods and lives. So the purpose of this video is to share with you my thinking and my views for you to go away and process that along with everywhere else you're doing your research and make your own decisions for your own situation. But today, as I record this video, this is my view, and here are all my reasons why I think house prices are properly collapsing. And you know, you might say, well, Charlie, if no one else in the mainstream media is really calling that, yes, they're forecasting 8 or 10 or maybe 12% falls in 2023. Just remember, if you go historically, all of those forecasts are always optimistic. And when there are house price falls, sharp house price falls, they're always worse than forecast. Now, I'm not saying that it's an overnight crash or a collapse. You know, these things always happen in slow motion and take time. But if I was buying or selling or moving house now or making decisions for the future about where I live, where I want to live, I would want to know all of the information that I'm going to present in this video. And everything in this video, I've put links in the description below the YouTube video to back up all of my thoughts and reasons, so you can go and look at the information that I used to research this. But it is my interpretation of the cumulative effect of all of these things that leads me to actually double down on the use of the word collapse. It was my video back in August 2022, 8 reasons why UK house prices will collapse, that led to this channel taking off. And I'm now, in this video, I'm saying that I think they are collapsing now, and that data in 3 to 6 months from now will show that's the case. Let me get into the reasons why, because there are 8 of them. So this is going to take a little while to get through. Hello and welcome to everyone everywhere that's watching me. We're on all the platforms here. Hi, Stephen Jones, Greg Robson, William Condon, SS, Matt Lockie, Frederick, thank you very much. And also everyone watching on TikTok as well. Let me get into it. So in no particular order, these are all of the recent stories that, and even if you like, oh, they're mainstream media, ignore it. The mainstream media is reporting on the Bank of England's letter, for example, and all of these stories are backed up with official data somewhere. So Bank of England cracks down on buy-to-let mortgages. They take aim at lending standards amid fears of mass defaults, and they're saying that they're bracing for a wave of defaults in the face of the recession. And again, my view is that the Bank of England, for them to say something like this and put this out, they never say how bad they really think it's going to be. And again, this is my interpretation of this act. But when they say the operating environment for firms remains challenging, the impact of increasing interest rates, inflation, and high cost of living is expected to, it means they're saying this hasn't even started yet. And this is January 2023, right? So that's the story in the Telegraph. Bank of England cracks down on buy-to-let mortgages. So that's my number one reason. Okay. Next, yesterday, Barratt Homes put out their trading update, and I've linked to this full 5-page PDF below in the video description. But here's the point, right? The private net reservation rate per average week, and private means individual buyers, so they also sell homes to non-private buyers as well. But the private net reservation rate has fallen from 0.6 per week to 0.3 per week. All right, compared to I can't remember. Go read it yourself, right? But in a nutshell, Barratt Homes at the end of 2022 saw a 50% drop in the private net reservation rate of their new build property. Okay, and the next one was today, this morning, Thursday, the 12th of January. Persimmon, one of the other UK's largest house builders, put out their full report, the trading statement. And again, this is linked to, so you can go and read the whole thing yourself. And this just merits a little bit of thorough investigation here, because overall in 2022, so for the whole year of 2022, private net sales was 0.69. Let's just look at that number. Let's call it 69, right? 0.69 per outlet per week. For the year, which compared to 2021, so 2021 was the previous full year, 0.83, okay? So that's overall average. But the change in market conditions gathered pace in the final months of the period, with the private net sales reducing to 0.3 in Q4, so down from 0.69, 0.3, with the last 7 weeks of 2022 at 0.19. So they've dropped from 0.83 was their annual average in 2021 to an end of the year 0.19. That's a 77% drop in private reservations. I mean, yes, I'm comparing average of 2021 with the last 7 weeks 2022, but that was when I was saying that things had fallen off a cliff. 0.19 per outlet per week is way, way, way below their yearly average, okay? So that's number 3. Number 4, this morning in the Times, they are reporting that the Financial Conduct Authority is predicting 570,000 homeowners are in danger of falling behind on their payments as they struggle with the rising cost of living. Sorry, guys, by the way, just going back to the new homes updates, okay? So the largest new homes builders are seeing, it might be temporary collapse. It might bounce right back. I don't know, okay? I don't think it is going to be a temporary collapse. I think it's going to get worse before it gets better for them. But I could be wrong about that. But what that tells you is that they need to sell their properties no matter what. And Persimmon, someone sent me the Persimmon incentives that they've got coming out right now, which are like, will pay 105% for your property and this kind of stuff. Make no mistake, these are acts of desperation for home builders. So why am I telling you all this, by the way? Because if you are, so many of you are out there wanting to move, wanting to buy a home, and you've saved up your money, you've got a deposit, you've got a mortgage in principle, and you want to move, and you're wondering what is the right price to pay. And that's the purpose of this video, is to let you figure out for yourself what the right price to pay is once you've formulated your own opinion. So these are all relevant facts in that personal calculation decision that you're making, all right? So the Financial Conduct Authority, not the Times are just reporting it. This is not sensationalist reporting. This is the Financial Conduct Authority forecasting over 500,000 homeowners are in danger of falling behind with their payments as they struggle with rising cost of living. So they haven't yet. 200,000 were already in arrears in June 2022, 6 months ago, 7 months ago, bringing the total that they're expecting to 770,000 households either in arrears or in danger of falling into arrears this year. And this was published by the Cross-Party Treasury Select Committee yesterday. Okay, so what effect do you think that might have on house prices? Is that going to help house prices restore? That they are forecasting 500,000 more homeowners to go into arrears than mortgages, right? Or are some of those people going into arrears going to end up in default and end up, some of them are going to end up losing their homes, right? It's almost inevitable because the government support schemes, for example, on universal credit, only apply for people who don't have assets and aren't earning over a certain amount of money and this kind of stuff. So there are going to be, that is a downward pressure on prices, okay? In my opinion, I could be wrong. Tell me if you think you're wrong. So that was point number 4. Okay, point number 5. You may have heard the story in the news today and yesterday about how Tesco and Marks and Spencer's and Next all saw surprisingly high spending rates in December 22, the Christmas spike. They're like, oh. And some people I've heard have been going, oh, maybe there's not going to be a recession. Maybe this is about, maybe it's okay. Maybe we're leveling out. Which would be a reasonable thing to consider until you hear the following 3 points, right, on that Christmas bounce. Number 1, it was lower than inflation. So we didn't actually spend as much in real terms as we did in Christmas 2021. Number 2, we bought fewer things, it just cost more. So their sales in actual revenue totals are up 5 or 6 or 7% on December 2021, but inflation is 10% or nearer 15% on food. So we actually bought less. It just cost more. And number 3, most importantly of all, that 5 or 6 or 7% increase in expenditure in December 22 was funded by the biggest spike in credit card borrowing since 2004. So we went to our credit cards because we couldn't afford to buy less stuff than the year before. It just cost more, but yet we still bought less than in real terms because of inflation. So it's a misleading bounce, if that makes sense. I hope that makes sense. So I've got an article here from the Guardian, the latest snapshot Bank of England. So borrowed 1.5 billion in all forms of consumer credit, of which 1.2 billion was on credit cards, as concerns mounted over the impact of high inflation. And, I just think people were like, come on, let's have a nice Christmas. Let's go out with our credit cards and enjoy Christmas because life's too short, right? It's an understandable thing to happen. So that's point number 5. Point number 6, not being reported in the media, but I am getting people who are coming to me, and let me read you this message that I got yesterday at 5 o'clock. I have reserved, this is a private message on Twitter, I've reserved a new build 1-bed flat in Reading. There is no obligation and I can get my reservation fee back. I think I'd be overpaying at the price. Do you think it's possible to negotiate them down? Now that's only one, that's an anecdote, but I've had other similar messages. So this is saying that even people with existing reservations at existing pre-agreed prices are going, hang on, I want to renegotiate. Now, none of that's reported in the Persimmon or the Barratt Homes trading statements. But in other words, if people with existing reservations, and there's quite a big time lag, isn't there, when you're buying a new home between when you make the reservation and when you move in, are going to start renegotiating, which, if you don't want to overpay, is a wise thing to do because you want to avoid the risk of negative equity, which is higher on a new build home because they have a new build premium built in than it is on a second-hand home, then you can see people either backing out of those purchases or renegotiating them down. Right? So that's point number 6. Point number 7. According to the Office of National Statistics, we've got something like 1.5 million fixed rate mortgages coming to an end in the UK in 2023. So this is the ONS page. In the first quarter of this year, January to March 23, 353,000 fixed rate mortgages will have to be renewed. And they go on to say that they're forecasting in Q2 it'll peak at 371,000. So that in the first half of the year, that's over 650,000. Over 700,000 mortgages in the first half of 2023 have got fixed rates coming to an end. Because of the cost of living crisis and the recession, there are going to be people who cannot afford their new mortgage payment and will be forced to sell as a result. That will put another downward pressure on prices. Okay. And now my very final point is to do with the house price data that I've been analyzing in Best Agent a lot, right? Because it's such a vast amount of data and it's moving so fast, and you've got new properties versus old properties. And just recently, me and the Best Agent team have been analyzing just the average prices of new properties coming on a weekly basis. Because one of the problems when you look at the overall average price for a county or a postcode is that there's an awful lot of very old properties just sitting there, hanging there with silly high prices, and they skew what's happening today. And I don't have concrete numbers on this, but I am 75-80% confident, based on the data that I'm seeing, that I'm looking at really deeply, that asking prices in January, we'll see when it comes out. So the asking prices of new properties, right? New listings coming to market, which you have to assume are people who actually really want to sell, okay, are dropping really quite fast. Like, I don't have an accurate figure, but my best guess is that they are dropping. This is asking prices, okay? Not agreed prices, not actual prices, just asking prices. But I think you could see, and this is just on new properties, so this will not be shown in Rightmove's average asking price figures for January or anyone else's average asking price figures, because I'm only talking about the average prices of new properties coming to the market. And we're now considering publishing a brand new property index that's never been out before, which is just what was the average price of properties that came to the market this week or this month, right? We won't be looking at what's the overall average asking price, because it is misleadingly high, which is why Rightmove's average asking price is so far above what average house prices are, if that makes sense. So that's point number 8. So I'm going to just recap those points, and then I'll come back and just check if you've got any questions, guys. So Bank of England is bracing for a wave of defaults. Barratt Homes' new private reservations are down 50% at the end of last year. Persimmon Homes is down 77% at the end of last year on the 21 annual average. There are 750,000 people expected to go into mortgage arrears if they aren't already this year. And remember, these figures are all still slightly time delayed. Number 5. I think that credit card borrowing spike, the reason it's relevant is because it reflects the true state of household finances and people's affordability, and therefore will lead to more people having to sell up. 6, I've got existing new home reservation holders asking me if it's okay to renegotiate. By the way, the answer is always yes. Is it okay to renegotiate? Yes, always. And they might say no, but you can always try. Number 7, 1.5 million fixed rate mortgages coming to an end this year. And number 8, the Best Agent data showing me that asking prices of new properties coming to the market are dropping very fast. I didn't put a figure on it, but I'm talking 5 or 6% drop in 1 month in asking prices. So of new properties only, not average existing properties. Sorry, it's a lot of math, a lot of numbers. Anyway, so guys, what do you think? Do you have any questions for me, guys? I don't have a prediction on Bank of England interest rate forecasts. I actually don't have a view on what they're going to do next. I'm pretty sure that they're still going to go up, but I don't know by how much. And do I think there's going to be more stock coming onto the market soon? Yeah, I do. I don't know how fast or how soon, but I do think in the next few months, you're going to see increasing numbers coming down, because I think with channels like mine, you should share this with anyone else that's moving house, because the faster the reality of what's happening at the coalface today can be communicated to people moving house, the faster those people can make their decisions and not get caught out and left behind. Excuse me. And I'm getting lots and lots and lots of anecdotal reports of properties having big drops in their asking prices and still not selling. Now, does this mean you shouldn't move house now? No, it doesn't. It means that there are actually likely to be some bargains that mean you're going to want to not worry about waiting for the bottom. So those of you who want to move now and are in a position to do so, you absolutely should be out there viewing. Be out there viewing, because that's the only way you're going to find out what's happening at the coalface. I'm still getting on a daily basis people sending me prices and percentages and asking me what they should offer. I cannot ever tell you that. I can never tell you how much to offer or what percentage, because there's no general guidance on it, and I can't tell you about a specific property. I would never make even if a close friend asked me about what to offer, I couldn't answer them without going to see the property itself, meet the agent, find out the seller's position, know what my friend's buying position was and reasons for moving. So please, guys, it's a waste of your time to ask me how much I think you should offer, whether it's percentage below asking or actual price on property. I can never answer that. And I know it's uncomfortable and difficult, but you must work that out for yourself. Nobody can advise you on what to offer. All right. So guys, I want to wrap this up. Sorry, guys. Again, Darren from Suffolk. I can't answer questions on mortgages or credit ratings. I'm not a financial expert of any kind. I'm not an expert of any kind, but I'm not here to advise on mortgages or credit ratings or that kind of stuff. But if you want the answer to that question, please talk to my mortgage guys. And my mortgage guys are handpicked guys I'm working with. They're fantastic. The URL is on screen now. If you want to talk to them, pop your details in there. I'll put you in touch with them. How far do I think prices are going to fall? I don't know, guys. I just don't know. I mean, I'm still, if I'm pinned to the wall on a national average figure, I'm still saying 35% at the end of this price slide, which I don't know how long it's going to take. It won't happen fast. It will happen slow. There are a lot of people, both sellers and agents and mortgage brokers, who strongly disagree with my view about how far house prices are going to fall. It doesn't mean you shouldn't move. It does mean you shouldn't overpay. And not overpaying, calculating what that means to not overpay, is a personal decision that only you and your mortgage broker can work out, right? So I have had some of you telling me, yeah, we finally got an offer accepted and it was at 5% here or 10% there. And I'm thinking, that's cool. And if you're comfortable with it, that is definitely cool. You can go ahead. But I still think a lot of people, it's just my opinion, it's just my amateur opinion based on the sort of unique set of data that I'm looking at. My amateur, unprofessional, non-expert opinion is that house prices are going to fall further than anybody is predicting. It's just my feeling. If I'm wrong, I'm wrong, guys. It doesn't matter if I'm wrong. That's just my view. So formulate your own view and proceed with caution. And by the way, some of you are saying, look, I've actually got plenty of money. Does it matter if I overpay? No. If you can afford to overpay to secure a property that you really want to get now, go ahead and do it. It doesn't matter. When I'm saying don't overpay, I'm saying that to people who can't afford to lose the premium of overpaying, to people who are extending themselves on a mortgage to borrow and don't want to get into negative equity. I want to help people avoid negative equity. That's why I'm saying it. Everybody, thank you very, very much for coming to the live stream again. I hope that was helpful, and I'll see you on the next one. Have a great day. Bye-bye.